Wagwan, welcome back to my YouTube channel. My name is Dreycosting. If it's the first time over here, what we do over here is to analyze the financial market, like, chop it up in pieces, so each and everyone can understand. Today, we're going to do the regular thing that we do on a Sunday. Mark up some charts. So we're going to look at gold as well as S&P 500. But before I jump into it, quick disclaimer. Alright, gold. So for gold kind of give me a little faked out, right? I'm going to be honest, right? Gold kind of gave me a little fake out. It was in this market era right here, right? Then it broke the market era. So gold broke the market era and did something like this. Made a lower high, so I thought it was going to stay somewhere in here. However, gold did not do that, right? So what I'm seeing right here is that gold has went back in this market area. So because it's kind of tricky right now, all you need to do is to get further confirmation. So it's one out of two things. Scenario number one, watch this. We have a minor resistance right here, right? We have a minor resistance right here. Minor resistance right here. So if gold does something like this, like break through this minor resistance, retest, forms a higher low, then we're going to go in for a buy and go here, right? And then we're going to have our entry here, stop loss behind this minor resistance, and we're going to go somewhere there about with our take profit, right? And we're going to ride this out for a couple of weeks until the end of 2020, right? However, let's look at scenario number two. If gold does not break here and retrace, break through this key line, retest and forms a lower high, then we're going to go in for a sell in this area. So this right here, this white line right here, this is a key area that you have to respect. So if gold does that, right, we're going to do something like this, right? Stop loss right behind this key line right here at 1847.80, right? And we're going to go down there about to where price was once before. So price was here before, so we can just put our take profit there about. So it's simple as that, right? Retrace here, forms a lower high, right? Bam right here, forms a lower high. If it does this, right here, forms a lower high, right? If it does that, form a lower high, right? After breaking through this line, right? Now forming a lower high up here, forming a lower high beneath the line, right? If it does that, then we're going to go in for a sell right there. Right? S&P 500. So S&P 500 was operating in this market here right here, right? This market here right here. But what tended to happen was that he said, nah, I want to operate at a higher value, right? So we seen right here where the S&P right here made this higher low. It's making the shift right now, right? So we want to see our next higher low. So from once a higher low is created here, right, and price does something like this and break through this previous low, right, then we're going to continue offer a buy. But the trick now with the S&P 500 is this, right? The trick now is this. When I look left, let's look left. When I look left, let's look left, right? I'm looking left, I'm looking left, I'm looking left, looking left, looking left, and still looking left. I'm going on, I'm going on, I'm going on, I'm going, I'm going like a NASCAR. But then I have no history where price was up here. So the S&P 500, the same thing as the NAS 100, right? They're making some new highs, right? The same thing as the US 30. I have no history. So how I'm going to play this? Where am I going to put my take profit? I'm going to do this simple thing, right? All I'm going to do is this, right? I'm going to go in right here, right? Go up right here for my buy, right? I'm going to put my, so look, watch me now. Stop loss right here, right? I'm going to put my stop loss there about, right? Let's put this buy right here. See that you get an entry right here. Going to put a stop loss right here, right? Stop loss right there. Got my profit line there about, right? I'm saying to you this, right? If price continue to make higher highs and higher lows, all I'm going to do is to move my stop loss beneath the previous low. Does that make sense? Higher highs, retrace, retrace. So every time price retrace, all I'm going to do is this, right? Move my stop loss behind it. Move my stop loss behind it. Why am I doing that? Because if at any time price breaks this previous low, then the definition for an uptrend of higher highs and higher lows would have been void. So that is how I would play S&P 500. Okay, hope you guys enjoy this markup. If there's any chart that you'd like to see me mark up, just comment below and I'll try my very best to assist you. If you have any question in general, just message me on social media or email me if you're not on social media. Big up to everyone and enjoy the rest of your week. I'm out.